All right, gang. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. It is December 8th, 2022 on a Thursday. Let's go ahead and get to it. If you haven't already, bottom right-hand corner of your screen, a little black logo. Click on that, turn on notifications, subscribe to our channel. Make sure to like our videos, hit that thumbs up if you like it. Really do appreciate it as always. Let's go ahead and get started. Around the horn quickly, Dow futures up 152. And the only reason I say quickly is because yesterday was an absolute premium killing chop fest. Nothing to do, really. So other than just watching and observing, that's really all we're doing. Obviously, we see futures are up. So let's see. We'll take a look one more time at the charts, kind of give us our roadmap. Some things that I did read this morning that I want to show you. But other than that, guys, nothing really has changed. If you're looking for some action, really the action is probably going to be a little bit more tomorrow, PPI, and next week is the gauntlet. If you guys have ever traded with us or have been to this channel before for a while now, you guys remember like earnings week with Apple, Amazon, Microsoft. Usually we call it the gauntlet week or the Super Bowl week. Next week is a Super Bowl gauntlet week, last of the year, actually. So imagine this is the time next year where we really want to go ahead and make things happen. So again, as of right now, we're just kind of waiting around, seeing the positioning, and go from there. David's already asking, hey man, what is there to watch? We're gonna look at it together, and I'm gonna show you exactly what you need to watch moving forward. Yes, I still call the standard rally is still intact. I know we've had 5 straight days of the S&P being down. Is not lost. Let's go ahead and figure it out and look at it together. Dow futures up 142, Nasdaq up 0.59%, S&P 3959 at 0.58%, 3920 seems to be that support on S&P futures, as you could see here, right around 39.20, let's call it 39.18. That's basically the same low level. That was the lows that we had right around, I think, the 14th or so. Let's go ahead and get the exact date. I want to make sure that I have that. We haven't hit lows here since the 16th of November. And then we retested that again. And then this was all Powell's speech, the Powell speech that we had. And then we came back down. So again, pretty much round tripped on S&P 500 futures. 3,900 seems to be that major support. Why do I remember this support so well? Because I had the 390 puts right here, but then Powell kind of screwed me out of it. I was up 20%, but this happens. That was that trend line that held. Both trend lines or wedges have broken. But 3,900 seems to be that really, really big support level looming currently. We're still holding above the 100-day moving average on the daily. If we go ahead and break this down here, for example, David, take a look at these two wedges that I have. So again, you have the yellow wedge here. Again, kind of staying there, but we kind of broke out of that, and then the green one in the short term. So let me go ahead and take away that green one to make things a little more clear to look at. So again, kind of that wedge kind of breaking down below that, but again, still that 100-day moving average that is bouncing on top of that. Again, that 200-day is a level we haven't broke since April, and now that 4,100 level. I think this is the chart that everyone's been watching. 1, 2, 3, and 4. Does this reject? Do we get back down? Do we continue the downside? Is this a redux of 2002? I say not really. Why? Because we did break that 200-day. We did not break that before. It's only been since April. So again, that August rally, we did not break that 200-day. We broke and settled above the 200-day on both cash SPX and S&P 500 futures. I still say that we get to 4,100. We'll break out of that trend line. And more than likely, again, bull case scenario, everything going well towards the end of the year. We have lower inflation. The Fed kind of pulls back on adding more rate hikes or so. We would need a lot of things to go well together. 4309 would be your bull case. That does sound a little crazy, but again, we will see what happens. Everything right now is on technicals because we really don't have a lot of news. Speaking of news, there's one piece of news that did come out, and I wanted to show you guys. This is the interesting one. Put call ratios. Put call ratios are always important to look at. Shows where everyone is looking at the market. This is courtesy of TweetDeck. Thank you, Lizon Sanders, for the tweet. Equity put call ratio spiked again yesterday to its highest since early 1997. And again, highest since 1997, guys. The last time we had that, we had an ignition higher from 97 all the way to 01. Okay, that's about a 4-year move. Again, that was the .com, kind of everything going together, technology, as the bubble was getting there. But again, you could see that we're at that point. What happens when we have put call ratios so high or put call ratios are so low? What happens is that You have too many people positioned on one side of the fence. Think of it as a crowded theater and there's a fire. Some people will get saved, most will get hurt. That's the best analogy I can give you. So, again, I'm going to be watching that very carefully, but this kind of helps that idea of the Santa rally possibly towards the end of the year. Nothing is guaranteed, but again, that's my contention to looking forward. And the only reason I say that is because now you have end of the year bonuses, end of the year and seasonally speaking is very strong for December. The only one, the outlier, was 2018 with the Fed. And what did they do? They raised rates in 2018. I remember I was there. And then we dropped, but in January we flipped, the Fed flipped, and we continued to rally. So again, there's so many historical patterns that we can go by, but at the end of the day, we just have to see what we have in front of us. Crude oil is up 3.43%. The Keystone Pipeline, I think there were some issues there. So again, nice bounce in crude oil. Remember, we are now round tripped back from where we were just last year. That's oil for you. Take a look at that on crude oil. Look at this round trip, guys. We'll go for a 1 year, and you could see from just literally last year, we're basically at the same spot. All of this was negated, all of that, from 66 to 130 all the way down. Now, the reason I talk about this is Grant just asking a question, what are my thoughts on XOM, the news that dropped this morning? Now, again, with XOM, what they're doing is that they're actually paying out bonuses and stuff like that. They had a great year. And my contention on XOM is that, and energy market in general, they were dead money for about 3 to 4 years. And no one was thinking about XOM for a while. XOM back in the days were not doing much. I mean, look at this. You were back in 2020 to 30. At that point, again, it was dead money for a while until we spiked. Again, from 17 to 20, it was just basically downhill, 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 and then to the 20th, and then finally breaking out. So, again, I think I find it interesting that a lot of people will have no problem with an Apple making their profit margins and their billions of dollars in revenue. No problem. Walmart, for example. Same thing with ExxonMobil. I mean, they employ a lot of people. Maybe you are for fossil fuels or not. But again, XOM is finally doing well. I think it's great that they're paying their employees. The executives get paid based on the stock price. Period. If your stock price is higher, as a CEO, you're going to get paid more. And remember, the board of directors is the ones who set the pay packages for the executives. And who picks the board of directors? You got it, the CEOs. Welcome to the world, guys. But XOM is fine. And again, we have talked about crude oil. We've talked about XLE. XOM is a big part of XLE. So let's go back to XLE quickly. And again, we talked about that double top right here. And I said, again, I love energy. I'm just not a buyer here. If you are an energy investor, it's probably a good time to take some profits because as we see, the commodity is going down. Finally, XLE is starting to catch up a little bit to crude oil. But again, XLE is doing so much better than crude oil, the commodity itself, because these energy companies have cash flow and they're doing great profits. And I mean, at the end of the day, they're paying down debt too. Remember, these guys were a lot of debt. Oxy was in debt too, just 4 years ago. So again, it's a good turnaround story for energy. I like energy for the dividends long term, but right now you're not really doing much here because you're just playing the double top. So 75 stock price possibly. We could look at that. That will get you to around the 61.8 fib on the short-term basis on XLE, right around 76. I could see myself pulling the trigger there, maybe get us $10 a little lower on XLE with energy coming down a little bit. We'll see where we continue on oil stocks. Oil, the commodity itself, because it is up today, but only on that Keystone Pipeline news. But I don't know if that's really the news you're talking about, Grant. But if you're talking about XOM in general, I think that's what you're talking about, the pay packages. If there's a different news that may I have missed, please let me know in the chat window here. Gold futures up about 0.16%, silver up 1.39%. Let's take a look at silver. I really rarely ever trade silver. It pisses me off actually, but there is a gap to fill on the daily at 22. If you're someone that is bearish on the dollar, you're probably bullish on commodities. SLV here, 22.26. There's a gap fill. Not bad. So you're talking about a 10% rise from here. You'd have to go a little longer term on this one, or take a look at SLV. But again, it'd be a short-term play. Nice return back. You could see that 16.19 just kind of held. We had a little bit of a range here, finally breaking out above the 200-day. Good sign. But again, that gap fill, 22.25. I hate trading SLV short-term. I always get burned. But again, if you're looking at a long-term play, or maybe just buying SLV, the ETF, 22.12 ain't a bad level to look at. Let's take a look at gold then. That's one name that we have been talking about for a while. Let's go to that 3-week chart, the one that we've always been talking about. And again, it kind of coincides with gold GC, which is the gold gold futures contract. And again, I said right around 1600. I'm not a huge fan of gold, 1672. But once you break over that 200-day, 1706, that's what you want to go by. We broke above it. It gained $100. So again, if you've been watching and traded gold, bless your heart, awesome. But again, I'm not a huge fan of gold here. But again, that 200-day, that was the bounce level on week, and it looked very nice. Copper up 1%. Nice that risk assets are up. Euro dollar. Euro dollar very, very, very tightly correlated with dollar with the S&P 500 futures. So again, it benefits us if we can get to 106 because that'll mean risk assets are going higher and the dollar is going lower. So again, let's put that alert at 106 on euro dollar. If that breaks, I definitely want to take a look at 107.81 as a target for a Forex long call, euro dollar long. Pound dollar 122.16, 133, 136.60 for the dollar again. Both are up. Bitcoin is up 0.33%. Again, still hovering around 17,000. Nothing to do there unless you're just hodling like me. 1239 on Ethereum up 1%. Let's go to the volatility index, the VIX, or the fear gauge, like people call it. And again, that kind of that 1956, 1950 level support, really the bear case for the markets would be that VIX retest that trend line of 34.42. But again, bull case for the market would be that we retest down to this level here of 1867 and possibly continue down with less and less fear in the market. But again, that is a possibility here. So we want to go ahead and put an alert here at 2463. If that does break out, then definitely S&P 500 and stocks will go lower. Go to the dollar index. How important is that 105 level? Well, it's been holding. I'm pretty sure traders have been watching that very, very closely as I have. So again, that's why we've been staying around 105 and hovering around for about 6 sessions. So some consolidation there. Do they let go of the dollar like 10-year yields? Again, you could see that head and shoulders pattern. I expect the dollar to continue to fall. 103.66 is my target. If we can get there, the S&P 500 will get to 4,100. That's the expectation. Let's go to 10-year yields. Very similar to the dollar chart, right? But you could see here that we broke below. Now, again, yields going down. Like I said yesterday, it's good, but yields are only going down for the wrong reasons. Yields are going down, bonds are being bought. Price and yield are inverse correlated, are inverse always. So again, if bond yields are up, bond prices are down, bond prices are up, yields are down. So if we're getting a lot of buys on the 10-year, a lot of buys on government debt, the reason they're doing it, or the reason that traders are going to it, is recession fears. It's not because they want to add liquidity to the system. No, it's just recession fears. So again, it's kind of a double-edged sword. Remember just a couple of months ago, rates are going higher. We need lower rates. We need lower rates. That's when the market will go higher. Now that we have lower rates, well, it's only because a recession's coming. This is what happens in the media. We'll just keep moving goalposts until we get something. But at the end of the day, guys, yes, lower rates are good for the economy. The U.S. economy is too levered, meaning too much in debt, to handle such a debt load, especially with rising rates. We still have to service our debt, entitlement spending, all that jazz. So again, it doesn't benefit the U.S. if we have a 10-year treasury yield at 5, 6, 7%. It just doesn't. So again, it helps when you have lower rates because that's more accommodative, that's more expansive. We just had 1 year of restrictive policies in terms of interest rates. Could that be it? Could we get more next year? That's really the bet. The trillion dollar bet on Wall Street right now is the worst over. I say it has. Personally, I say that the worst is over. I said that the bottom is in 3,500, right at that 200 weekly MA. So far, right? But who cares about so far? Will it hold is the question. Let's see the macro as we move forward. One more stock to take a look at. Tesla has been absolutely been brutalized lately. Now there's more news about Tesla going in terms of the Twitter financing for Elon Musk using his Twitter shares as collateral. Not the best. The good news is that if you're looking to trade this, there's a gap to fill at 170. Let's see if we fill that. But again, wasn't a lot of edge in trading this name unless you basically sold right here, unless you shorted basically right around 195 to 170 from this week. But again, low volume chop is premium killing. You're just giving away premium. That's why we're just waiting and observing. But next week is the big one. So again, you want to be on that. Next week, I will do the morning note. I will prep you and for everything that we need to be waiting for. Again, we have CPI next week. We have Friday tomorrow. We have PPI. I'll go over that as well. And then we also have FOMC. Oof, be fun. It will be fun. So rest up and be ready for next week. Have a great rest of your morning. I will catch you guys tomorrow for the morning note. Remember, tomorrow's PPI at 8:30. So any risk you have holding overnight, it will be exposed to that PPI number tomorrow, 8:30 in the morning. Have a great rest of your morning. I will see you then. Cheers.